All right, so we've got another episode of Tax Sherpa Stories here. I'm Neal. I guess I'm still the host, founder of Tax Sherpa, where we help solopreneurs and small business people save giant amounts of money on their taxes by proper entity tax planning and setting up tax strategies for them, depending on their individual circumstances, and generally save people tens of thousands of dollars a year. With me here is Serena. She's our ops manager. She makes sure everything goes where it needs to and keeps all the balls up in the air.
Yes, yes, I do.
uh, yeah, Serena's become an integral part of Tax Sherpa over the last year-ish. But yeah, today I wanted to talk about the IRS. And Serena doesn't actually know what we're going to be talking about yet. So this is going to be a little bit putting her on the spot. I follow the IRS on LinkedIn just because it's good to see what the enemy is saying, right? There's a bunch of things that have been happening over the past several months with the IRS. As you are probably aware, there's a lot of news stories about it. As part of the Inflation Reduction Act last year was adding $80 billion worth of funding to the IRS over the next 10 years, and they're going to add 80,000 agents or something like that. So then there was a slight budget cut to that future outlay with the debt ceiling negotiation that was done in Congress. And that was, I don't know, 2 months ago now. And as we speak right now, it's September 21st, 2023. And there is another looming debt fiscal year negotiation that's happening in Congress. People are already talking about another shutdown because I believe the federal government's fiscal year ends on September 30th. And that's where the sticking point is passing a new budget for the following year. And Republicans and Democrats obviously don't agree on how to do stuff. That those billions of dollars over the next however many years, that's not set in stone. That's subject to revision each year as long as Congress can't get along, which is probably most of the time. With the IRS, though, they have been aggressively advertising on LinkedIn. So I'm just going through their posts that I've seen recently. IRS is hiring computer scientists, revenue agents, revenue officers, and they do other stuff. Here's a webinar on 1040 NRs. Here's an effort to restore fairness to the tax system is underway, focusing on wealthy individuals and corporations. IRS will ensure audit rates don't increase for people earning less than 400K a year. That was one of Biden's promises. People earning less than 400 are not going to be audited by all this additional funding and all these additional revenue agents. We'll come back to that. So here is apply for IRS job opportunity. This one is apply for a job opportunity. Hiring
Wow.
event. We are hiring. Take a look at IRS job opportunities. Cincinnati, Northern Kentucky. There was another post I saw that was they were hiring in every state. So yeah, there's a lot of hiring going on at the IRS. Some of it is customer service, some of it is back end operation stuff, but a lot of it is revenue agents. And some of their messaging is come ensure that the tax system is fair. I don't know. I don't know if that's really who you're attracting, but as part of this whole initiative, the IRS puts out press releases. Here's the one from last week, and saying they announce sweeping effort to restore fairness to tax system with Inflation Reduction Act funding. That's that $80 billion. New compliance efforts focus on increasing scrutiny on high income partnerships, corporations, and promoters abusing tax rules on the books. They're going to shift attention to wealthy from working class taxpayers. Key changes coming to reduce burden on average taxpayers while using artificial intelligence and improved technology to identify sophisticated schemes and avoid taxes. If you read through all this, which I did, so you don't have to, there was a lot of people are concerned because yeah, you say that, but what does that actually mean? And here's my major issue with this. Actually, before that, so Serena, let me ask you. I'm gonna read this passage and tell me what you think of this. So, as part of the effort, the IRS will also ensure audit rates do not increase for those earning less than $400,000 a year, as well as adding new fairness safeguards for those claiming the earned income tax credit. The EITC was designed to help workers with modest incomes. Audit rates of those receiving the EITC remain at high levels in recent years, while rates drop precipitously for those with higher incomes, partnerships, and others with more complex tax situations. The IRS will also be working to ensure unscrupulous taxpayers do not exploit people claiming these important tax credits. So, what's your impression of that paragraph that the IRS is saying?
They're saying that for those credits that they're looking to make sure that the right people are filing them and that these credits are not filed by the wrong people or
Okay.
fraud.
Yep.
So looks like they're trying to implement less fraud for those
Okay.
credits.
Okay. What I hear is a whole bunch of weasel words.
Mhm.
And the reason why is because the IRS publishes statistics on the tax gap. So this is publication, if anybody wants to look it up, it's publication 1415. And what the IRS does is they every few years they publish a new report on the most recent few years. This one goes analyzes 2014 to 2016. It's always several years behind because they have a 3-year audit cycle and those have to close before they can put it into this analysis. Basically, this big box is the IRS is saying they estimate they should have received $3.3 billion worth of tax. What they actually received was $2.8 billion. And
Mhm.
so 496 billion is the gap. That's the difference between what was collected and what they think was owed. And then they break it down by all these different categories. The so 496 is the total. And then by individuals, it's 1740. So that's and then corporations is 354, and employment tax is 1131, estate tax is 22. So that's the total tax liability. And so then the gap, or what they actually collected, was 1.3, 313. These are in millions, 1,017. And then the gap is 496 right there total. 357 is that is individual, 41 is corporate, 93 is employment tax, and 5 is estate tax. If you are the IRS, you're going to go where the money is. That's just common sense. And yet they say they're implementing AI to analyze these large partnerships that own billions of dollars worth of stuff. And okay, fine. What they'll probably be doing is plugging AI analysis into bank accounts and seeing if the numbers coming in and out are matching what's on those large tax returns. But there's only a few hundred of those. So what are the rest of the 80,000 people doing? And my guess is they're going after this large chunk of money, this $357 billion. And of this, the largest category is business income. Right there, 130. I don't know if you can actually see that. Let's see if I can zoom in here. 130 billion of the 496 is this one category, individual business income. And what that means is Schedule Cs. People who either are sole proprietorship or people who have a single member LLC that's disregarded for tax purposes, they file Schedule Cs. And that is the largest pot of money that the IRS is aware of to go after for taxes that they're owed. So my thinking is that that is going to be the place that they go. So how do we square up that with these promises that says do not increase the rates of those earning less than $400,000 a year? So my thought is that okay, we're going to audit less earned income tax credit people, and we're going to take those same numbers and audit the Schedule C people that are earning less than $400,000 a year. Plus, if you have a Schedule C that where the gross revenue is over 400, let's say you have some kind of store, you sell $800,000 worth of stuff, you have your cost of goods, which is 700,000, that leaves you with 100,000 net gross profit, and then you have your operating expenses out of that. So really, the number to look at is 100, but on the tax return, the top number there is 800. So now you're over that $400,000 a year. So you're no longer protected by this approach. I think we're going to see huge increase in audits on Schedule Cs in the coming years because of these two factors. So one is gross revenue being over 400, even if net profit is nothing. And two is we can shift around these numbers, that people that were getting audited for EITC now getting audited for Schedule C. And it's just, that's where the money is. So what do you think of my analysis here, Serena?
Pretty good. I love it. It makes sense of what they're really trying to do versus what they're saying they're trying to do.
Yeah, and don't get me wrong, I do believe they're doing these other things, but again,
Yes.
that's 1,000 people tops are going to be doing that. The rest are going after the everyday folk that they swear up and down that they will not be going after. I think they're just going to be shifting emphasis, let's say. So yeah, that was my thing I wanted to talk about today because I've been on LinkedIn a lot more past week or so, and I'm just seeing all these IRS posts, one after another, which is crazy. Hiring, revenue agents, customer service, it's aggressive, and people need to be aware. The biggest thing to protect yourself is if you go back to that same chart, is that if Schedule C is the target, don't be a Schedule C. You shouldn't be Schedule C anyway, really. You want to be 90% of the time, S Corp is going to be more advantageous, or even an LLC partnership, depending on your situation. And that's going to reduce your risk of audit by 10 times or more going forward.
And
So,
yeah, that makes me wonder when you were telling me about the Schedule Cs and how the audit risk is like 80, what is it, 80 to 90% likely, or what's the audit risk?
so audit risk across the board is about 0.5%. So it's just
Okay.
your name getting picked out of a hat by the IRS. As you do more things, that increases your chances. So things people abuse on Schedule Cs, these are free tax tips. Things people abuse on Schedule Cs is home office deductions and travel or car mileage kind of stuff. I've seen crazy numbers on people bringing in old returns from car mileage because you got to document everything when it comes to audits is documentation. Do you have the support to back up the numbers that you claim on a tax return? When the IRS sends out these letters, most of them, there was actually another announcement that they're not going to be doing door knocks anymore, which should never have been a practice. When they send out these letters, basically it's request for explanation generally. And they say, okay, you claimed this, that, and the other. Let's see your proof. And most of those letters do not get responded to at all. And because people don't have the proof, and
Right.
they don't hear from you, and then they say, okay, we're disallowing this, we're disallowing that. Your new tax is whatever. Pay us. It's critical that, especially with all this hiring that's going on, that people have their ducks in a row when it comes to their taxes. Especially those solopreneurs, those gig economy people, and small business people. Got to make sure everything is buttoned up and
Yes.
ready for. Hopefully, you'll never need it, but you want to be ready for if you get one of those letters, to be able to respond and say, "Okay, here's my proof. Go pound sand."
Yep.
So that's our tax Sherpa stories for today. A little bit of a scary story. If you do the right things, you'll be protected.
Yep.
And contact us if you need help.